It is my pleasure to welcome to the show Brett Simba. Spencer, could you please bring our guest on?
Hey, how you doing?
Good. How are you, Brett?
Good. Little rough morning. A little sell off this morning, but
just a little bit.
Yeah, caught some nice rebounds though so far, but we'll see how the day plays out so far.
This morning, crazy stuff, and then today we've got the GME / like Robinhood / like hedge fund hearing around.
Yeah, that's gonna be crazy. We'll see.
Yes.
We'll see what they, I guess, come out with as the judgment on that. But I mean, I don't even know. I don't see how. I mean, he definitely, I guess, manipulated. You could say, but there's supposed to be some type of freedom of speech on Reddit, obviously. But I think he was like registered though, so that's like the issue that comes up or something like that.
And when you say he, you're talking about Roaring Kitty.
Deep fucking value.
Deep fucking value. So yeah, if you guys don't know, Reddit user Deep fucking value, aka Roaring Kitty, which I believe was his YouTube handle, was one of the first people. It was like basically the person at the center of this retail trader fervor over some due diligence that he put together. He put together a very bullish case for GameStop, which actually was sound in my opinion. I loved a lot of what he had to say. I mean, again, it just comes down to getting the base around them, and then everyone says that it was mostly retail, or they think, but there was some institutional money behind the pump also. 100%.
Nobody likes to look at that, but
so that's enough with what's going on outside of the charts. I'm wondering, Brett, if you wouldn't mind. Today's a funny day, so let's stay on theme. Today's a day where a lot of our longer term, our ETFs, our long-term holdings, our Apples, our Microsofts, all that kind of stuff, getting hit a little bit.
Right.
How do you use basic technical analysis to stay sane, to not lose all your money, and maybe even profit on a day like this?
So really on days like this, obviously you're going to have swings or long-term holdings, right, that are obviously always going to be taking a hit here. So what you want to be able to do is either capitalize on some of these quick dead cat bounces. So for instance, today, I guess I could share my screen here, right? Let's see.
Yep.
Okay, cool. So today, for instance, at the open, basically what I was looking for, I like to play a lot of these high caps, Apple, Amazon, Shopify, because a lot of the moves that you can make, if you do time them right, especially on scalps, we mostly do options. So if we're scalping and we do get a nice entry on some of these names, 1% when you're in the money, obviously on some of these names is going to be $2, $3K, $20, $30 obviously transcends to that when you're trading options. So what we kind of look for here, and what I alerted in our chat too, was, we saw Amazon yesterday take a big rip pretty much while the whole market was pretty much down. And, Apple was, I think, the main cause of that. You could take a look at Apple, right? Huge sell-off. And never really recovered. Couldn't get back above this BPOC here, right? Yeah, easy resistance. This was our pre-market lows. Came back up, retested it, rejected, came back up, retested it, rejected, and couldn't really even get above it at the end of the day. And again, now we're just selling off here with no real recovery at all. So today, I still liked Amazon. I thought it was pretty strong because, again, on the daily, right? And this was great. On Amazon right now, you always have to look at the daily chart. Even when you're scalping, even when I'm scalping during the day, I like to look at the daily chart because I like to see where you're at exactly on the daily, because you're always going to have a strong reaction for those usually looking for a longer term position. And if you're looking for a longer term position, usually they tend to go heavier on those positions, at these institutions or even some, whales in retail trading. So if you see some big buying pressure, around the 50-day moving average or the bottom of, a trend line here, right? You could say we dip right below here, but pretty much for the most part, right, we're holding this bottom area, and this has been since pretty much September. And then we have a clear high here, clear top. And, we've been thinking that tech's going to lead this rally higher still, because tech really has been consolidating for quite a while. We haven't gotten too much of a move from Amazon at all. Tried to break out last week, but if you're scalping intraday, you can pay attention to some of these levels, and this is how we were able to catch it yesterday and then today again. But anyway, let's go back to the scalping, right? So today, basically, we saw a wick right to the downside. So immediately I said pretty much at the open, what we should be doing is immediately taking a long. Now, the reason we're taking a long right here is because we have an easy stop. Our stop's just going to be below not yesterday's low here at the open, but we're going to use this as our low right here.
Really quick, can you tell folks what averages you have running? What are those lines?
Oh yeah, sure. So my I'll pull them up right here. There you can see. So the red one is my 200 MA, the yellow is my 50 MA, and the blue is my 20 EMA.
Got it. So that's regular old moving average, and then an exponential moving average.
Yep. So I use SMA for the 50 and 200, EMA for the 20.
Do you always use that?
Oh, this is all I use. I used to use like RSI, stochastics. I used to use Bollinger Bands, everything. I found that you're cross-checking yourself way too much, at least I am personally, with using those indicators. And RSI is really a fear indicator, because a lot of these stocks, especially in a bull market like this, you're going to miss out on a bunch of moves because you think, RSI is overbought. Or RSI is too high. So I just like to strictly use price action now, and it's worked a lot better for me.
Yeah, I just screen cap those for my own benefit. Thank you.
Yeah, for sure. I mean, it just simplifies it, a lot more than checking 5-6 different things. I don't even use the moving averages too much. I like to use them on the daily. If you have a trend day, which you can see here, right, when we were trending up, the 20 EMA, and all I use for scalping is the 5 and the 15 minute. On the 5 minute, your 20 EMAs, as soon as you see a rip up, you're just going to keep bouncing off of it. That's all that's going to happen. Until you break the 20 EMA, you hold your position. That's it. It's literally as simple as that. As long as there's no trend line breaks or anything, you could say like right here, we had a little bit of a move sideways, right? And then it kind of led into the dump a little bit. But until we break the 20 EMA, I'm not out of the position. So yesterday, that was the greatest trade we took. So we did an Amazon and a shop play yesterday, but let's go over today's, because I know you said, when the market's down. Same thing though, basically what we did was we did the same thing that we're doing today. We're buying at the open. Our stop is very tight, right below the lows. And that's pretty much it. I mean, your R to R is always going to be, a 2, 3 to 1, because in these cases, your stop is so tight, your rewards, again, 2 or 3, right? Usually at the open, what do you get? Some volatility. You get a move up. We know that when there is a red day, right, there are going to be some individual names that outperform others, and you're going to see a big pop up in those names. What happened here? A big pop, retest of yesterday's close, and then a straight shot to the highs. So this, on Amazon, especially if you're doing weekly expirations or next week's, we were able to make like 80 to 100% on an option. So, it's a couple $1,000s. And what's our risk? Our risk really here entering is probably about, it depends what contract you get, but about probably $350 to $400. So it's a good R to R.
Are you getting single leg options?
Yeah, I just strictly do options for the most part.
Just a plain out call, plain out put.
Yeah. So, well, this would be an in the money at whatever strike. For instance, this was, since it was yesterday and it was, Wednesday, I went a little bit out of the money on this one. So I think I did like a 32.80 just because I figured we'd get a nice pop. Today we went with in the money because it expires tomorrow. Exactly. So again, I went with 32.80 instead of out of the money, but today we also opened at 32.80. So a little different. It depends how many days you have to expiration. It's better, in my opinion, to always go in the money if you can, obviously, because at that point, you're limiting your risk to theta because you're only subject to the decay on whatever extrinsic premium you have. But, sometimes they can chop around a bit. So right now we trimmed these already. It's basically almost a 0 date at this point. We have 1 day to expiration. So these are going to move fairly quickly. So we were able to already get 50% out of this trade just alone on this little move here. Shop was even better because we got in at the wick down here, retesting this previous consolidation from yesterday. This was the best trade we had yesterday. So this was, and I think this was just Kathy Woods buying because she said she did buy yesterday. So, but anyway, what happened here was Shop had earnings. They had a great earnings, crushed it. But what happened is they don't see themselves doing as good next quarter. So guidance was down. Overall, this is my favorite stock. Overall, I still love the stock. I think it might have some room to come down, but we just basically played the breakout of this zone, you know, right here. I mean, you had a clear highs here, clear lows, right? And we just waited for the pop here. And again, the 20 EMA is going to indicate that you're having some momentum. As soon as I see this volume here on this candle right here, ramping up, we have a huge breakout and then a follow-up. I know that we're probably going to run a bit more. My target, again, is yesterday's close. And look, it's exactly where it rejected.
Beautiful. That's a great trade.
I mean, I try to make it as simple as possible. And, you know, a lot of traders try to complicate things, and that's fine. You know, they can do it their way. I just like to teach everyone that, you know, comes onto our team or buys one of our courses or programs that life is about simplifying things. Trading should be the same.
So really quick, we got a question in chat. Why do you use the EMA on 20?
Yeah, so the EMA is always going to be your fast moving average. You want to always use your EMA for your smaller moving averages. So personally, I only use the 20. I used to use the 9, but honestly, I don't like too many lines on my screen. So I just decided to use the 20. But you get a heavier weighting towards the most recent price action. So if I put on, I'll show you because some people don't know this, you know, let's see, moving average. Let's just put on the 20 SMA, right? I'm gonna show you. The difference might not be too much, but so, okay. So it's not too bad here because there was a big consolidation period, obviously. So they are going to roughly be the same. But you can see that what happens with, this is the, here, let me change this color. I'll make it orange. All right. So you can see that when we get this big pop, right, on this candle here, this is going to be the highest weighted candle at the time that this happens. So we'll play it out. We'll do a replay of the day, right? Oops. All right. So you can see when you get a big pop, right, what is curling up faster? The 20 EMA rather than the 20 MA. And that's because your your most recent data holds a higher weighting. I actually just did a little slide on this. It's like, what are the percentages? I laid them out somewhere, but instead of having like 5% weighting for each candle's price close, it is, and I think I have it here, which is pretty cool. It's interesting to see. Yeah, so it goes from 9.5 on this 20th candle, and then wherever the first one is, I'm not going to count them all, right? But the first one only has a 0.5% weighting. So you can see how much weight is given to the most recent candle rather than the first. And that's what's going to move your EMA faster than your MA. And we can see that play out here. And usually when you get no consolidation, if you get any types of explosion, so for instance, if we go to another chart, we see something that like exploded, probably go to like SOS or something. No, it won't work because I took a big dip. Well, yeah, kind of here. You can see right here, right? Because on SOS, when they did that liquidity grab yesterday, it was a huge drop. When we recovered from that, right, the 20 MA is still using a lot of weighting, 5% on the candles that were during the dip, while you have your 20 EMA already curling up because it's giving more weight to what? The bounce that already happened. So that's what I like to use. You know, I guess these aren't exact. This is probably a better example, but you can see it happen a lot during the day. I just don't like to use the 20 moving average. Again, if I'm using a moving average, it's most likely because I'm doing a swing. on the daily or the 4 hour. Although scalping on the like the 5 or 15 minute time frame, the 200 MA is really good. It comes into play a lot. You can see here. You can see yesterday. Comes into play a lot on the 5 minute as well. But again, you don't use these alone. You just use them as another type of confirmation. I usually like to have 2 or 3 things. I like to see volume. I like to see candle price action that I like. I like to see a reversal doji at the lows, or I like to see a bullish hammer at the lows if I'm going to be buying the dip on something. Again, my stop is super tight on those trades. It's just below that candle because clearly that's going to be where there was buying pressure. If the bears are able to push it below there, most likely we'll see a continuation in a dump. So those are I like to go with very high probability trades. A lot of people would say they're risky trades, but I don't make them as risky because I use a tight stop. So by taking a bunch of risky trades, but making them have a tight stop, they're no longer going to be a risky setup. Because again, if I have a 3-to-1 R to R or a 4-to-1 R to R, most of these trades will reverse at these levels. If you win even 50% of these trades, you're always going to come out on top. Because again, for every 1 win, you can lose 3 in that regard. But we don't even see that many losses on these. So it works out really well. But that's my main strategy, I guess, for scalping. I know I probably went really into detail on that. But
no, that's perfect. I told folks we were going to talk about moving averages today. And you went in depth.
Yeah, for sure. I mean, it's really important to understand how to utilize these. And, a lot of these institutions, this is what they use in their algorithms on the daily. Daily is always going to be your biggest thing. And I was telling, I was on the show yesterday, and I was telling Jay, right, about Wingstop. Big dump yesterday. Where did it bounce? Right at the 200-day moving average. Where does it always bounce? 200-day, 200-day. So I told him, whenever if you see what we call a pull back to earth, a gravitational pull, bad earnings, right? Well, when you're all the way up here, you're way far away from your 200 MA. We might break back down, right? But what do we have here at the 200 MA? We have a couple things. It's a little bit lower, right? But, that's okay if it's on earnings. We have a clear trend line here. We have the 200-day moving average, right? So what's going to happen here? There's going to be a bunch of people having buy orders around this level or around, maybe this level here, previous highs, somewhere like here, right? This previous high. So, as long as I have something like this line up, this is where I would take a swing trade. If you entered it, right at the wick there, you probably made some decent profit, even if you were doing a swing on an option, probably 20% or so, 15, 20% at least. And then, you see where this candle closes today. But again, your stop is just a daily close below these levels. And that's mostly what we like to do for swings. We find things that retrace back to earth and look good for a pullback. Oh, wow, this is great. So this is something that we posted yesterday. Or I'm sorry, 2 days ago. We entered Kraft Heinz. I went into super detail on it on yesterday's show. It's just a big continuation. We're up another, 4%. This is great. This is crazy. We thought this was going to take 2-3 months to play out. It might be only a couple weeks. We did a July call on this, $40 call. It was only $1. It was $100. And now we're looking at, let's see where we're at on it. We bought, it's already 100% trade, and it's a 7/16 expiration in 2 days. So
all right.
And I called it yesterday. You still could have even got in yesterday. It was up only 30%, and I did it on the show too. So, but this is what we're playing on Kraft Heinz. I went into super detail. I'll recap it real quick. What happened in 2019? Their valuation got cut in like half on Kraft and Oscar Mayer. Company got absolutely fucking crushed. 28% drop. Never really recovered. Some good scalp opportunities, some minor swing opportunities here, but nothing you would hold long term. Who could have predicted this? Not many people, in COVID, so that would have been a good one. But besides that, not too much you could take here. Once you see a break above these highs, right? We came back and retested here, rejected. We had a good earnings the other day. It was a great earnings, one of the best days for Kraft in a while. It was almost 5% day. They said that they sold their Mr. Nut brand. for like 3 billion or something like that. What does that do? It gives them a bunch of cash flow to focus on their current brands rather than expanding all these other brands that they've been doing, which hasn't been working. So once you get a break above here, you get a nice close or you get a nice earnings, something that possibly could push you. You know, this is the third time we're retesting this. Usually the third or fourth time, it almost always breaks up or down depending which way you're retesting. Where are we going to target? Just the gap fill, right? So the gap would be up here, but realistically, we look for something like right around this range first. Why isn't it working? There we go. So that's it. So how do we get our 40 target? Well, 40 bucks, you know, roughly 41, but we like to go with the whole numbers because they have higher open interest usually, so 40 or 45. It's a cheap contract. It was $100, $1 each. So we loaded the boat on those. 7/16 expiration, July. We have until July for it to get to 41. So, you know, I'm pretty sure we're going to get there by here. That would be our break-even price at least. So, yeah, this is going to be probably one of our best long-term plays.
So, Brett, I think that's a great note for us to close on.
Yeah, for sure.
What I want to say is that you touched on exactly the type of things I was hoping that you would. We've got moving averages. We've got how to trade on down days. We've got
the 20 on the daily curling up on these big days. Same thing.
We've also
got over the 50. It's a good indication of a move up here too, as you can see.
So I know that you have so much more.
Oh, I can go for days. I do this all day. In our I literally like eat, sleep, and breathe this all day. I talk in our chat room more than I talk to like my best friends.
So then on that note, Brett, where can folks get more from you? Where can they find more of that knowledge?
Yeah, you can check us out. Our site, SimbaStocks.io. It's right here. If you guys want, we have a bunch of different membership packages here. We offer lessons as well. Again, we do everything though: scalping, day trading, swing trading, position trading. So it's great for the most part. We have a Slack that we use where we post our exact plays that we're taking, charts. We teach you fundamentals, kind of like I was just saying about Kraft. So it's good stuff.
Good stuff indeed. All right, Brett, thank you so much for joining us on Get Technical, man.
All right, thank you. Have a good day, man.
You too.